All right, so welcome to our weekly podcast. This is Sonia and Richard show, episode number 6, still season number 1. So my name's Richard, wonderful
And
partner Sonia.
Sonia here.
Today, what's our topic about, Sonia?
So we're just going to speak about pricing. Since we've been active on TikTok, a lot of people have asked us and sent us a few emails asking about the pricing. So we just kind of wanted to address that to show that we're not hiding our prices. There's nothing to hide. We just wanted to express, how much we charge for our services, why we charge that amount, and how it will be beneficial to you and how it's kind of relating to your situation and circumstances. So there's no one fixed price for what we have, but let me not get too much into it because I'm going to ask Richard the questions. So the typical question that we usually get that people ask us is, are trusts expensive?
Okay.
So how would you answer that?
Yeah, they are. They're not cheap. They're not designed to be cheap. They do a magnificent job if you use them right. I see them more as an investment because you're only supposed to do it once and they last 125 years. Unless you've got a sophisticated scenario, you might have multiple trusts, but they're not. I don't think they're cheap. I don't think they're expensive. I think they're valued for what they do. But yeah, if people are not ready or haven't got an idea of the pricing, they might get stunned of how much it will cost. But in the general scheme of things, I think that they're not the cheapest product that we offer, but they definitely offer a lot of value for what they do. So, and they tend to save the clients a lot more money than how much it costs them to invest.
Mm-hmm.
So yeah, I would say that's kind of an initial start, really.
Okay. I remember you said that you were going to show me the price list.
Yes.
But how much?
Still talking. Yeah.
Yes. So for the price list for the trusts, how much does it say that we charge online? At least I think that's the starting or the base.
So I mean, we do different types of trusts, and we should get the pricing.
Oh, okay. So on our website, for example, just having a look for the trusts.
Yeah.
Well, we can talk about wills as well because we also do wills.
Yeah.
So for a single will, it's £180. Is that the starting? The general?
Yeah, I mean, I'll be honest, I can't remember the last time I've done a basic will, but yeah, it's a standard will, literally no bells or whistles. It's just very basic. It just nominates your executors, maybe some specific gifts, and that's pretty much it. There's really not much thinking behind it, who your beneficiaries will be, and that's pretty much it, really.
Okay.
So it's based on your basic wishes.
Okay, so I'm just going to go through the pricing because there's several different types of trusts.
Yeah, there are.
That we do. So the life assurance trust is £540.
Yeah.
The business property relief trust within the will is £420 per director/partner. The joint life assurance trust is £840. The deed of assignment or life assurance is £540.
So yeah, I mean, there's different products. I think because there's so much going on, the first thing someone will probably do is like, I'll pick this like a recipe, like a menu, in a restaurant, and not understand what the product actually does. So it's very difficult, as much as there's explanations as to what it does. The whole point of it is that some will come to us because they need planning, and then we'll explain what relevant product is once we know their circumstance and situation. So, and we as a company do not really do business from a commodity position. We're not price based. We're just value and service based, and the price is the price. Obviously, a common sense approach. So you mentioned, for example, the single will, mirror wills for 2 people. We rarely do standard wills just because we believe in generational wealth. A standard will is not really going to do that if the priority is for generational wealth. We have written them, maybe for someone who's young, doesn't have many assets at the moment, makes perfect sense to use a basic standard will. But once you've got children involved, family involved, relationship, you've got assets, then a standard will really and truly is not adequate, especially if you want inheritance tax planning, which again we find historically a lot of clients will come to us. And I think maybe, I don't know for sure. I mean, I've seen a few comments um, where solicitors, for example, are very much, if it's a large firm, focused on commission and bringing in billing clients. And so they may not be too inclined to, and it's just a very generic statement. It's not an accusation. It's just an observation. And I don't think private client solicitors who specialize in our area will do it. But I've seen quite a few comments and read books around it where it's just like, oh, we're not asking you questions around your situation. We just like, well, you ask for a will, we'll provide you with a will. And the reason why I can even confidently state that, because when I'm seeing clients with wills not even 2 years old, and they've got assets, nearing £1 million, and they've just got a standard will, no family planning, no inheritance tax planning, and I've asked, well, did you even get consulted the question or asked the question? And like, well, I'm told no, and that's like every single time. Then I'm quite shocked, really, as to, well, why have you got a standard basic will for your situation? So it really makes me want to get quite upset. So that's what we don't say. People ask the price. Yeah, you can look at the price, but it's like saying going to get a car serviced. If you drive a banger, then yeah, a service is a service. If you drive a Lamborghini SUV, or you've got a nice BMW and you want to look after it, you got to go to the right mechanic who understands the vehicle, that can give you the diagnostic that you want and service the car how it should be, so it's not going to break down 2 miles down the road as soon as you drive it off the forecourt. It's the exact same scenario. You want specialist planning for your personal, bespoke family or business situation. Then price to some degree is irrelevant. Let's figure out what the problem is, provide a solution, and then here are the products that will work to get the solution that you require. Then you decide whether you want to take it or leave it, or take some of it or not, and do some later. That's purely up to you as a client. As far as we're concerned, we want to make sure you are fully aware of what the situation is and what the requirement is to solve it. So in some degree, the price list is irrelevant to me. But I get it. People want to know how much you cost, how much you charge. The other thing about price lists, which is inaccurate, you don't know the quality of the work you're going to get unless you're dealing with people who are exactly the same kind of qualification, same kind of understanding and knowledge background. You might then, if you know what questions to ask, and again, we provide information for clients to ask the right questions. We're happy for people to shop around so that they can ask questions and realize, okay, we're getting the advice that we need. Some people may not even understand the questions that are being asked of them. Then they realize the value that they're going to get. So it's no different to going shopping at, Lidl versus Marks and Spencer's versus Harrods. Like, in the day, you get what you pay for most of the time. And that's how I see it in terms of offering value to clients. So bringing it back, I think I ranted a little bit. When we start going to certain types of products, so for example, a life insurance trust, we've got 2 types of life insurance trusts. We've got one for standard life insurance policies. If your life insurance policy exceeds 300,000, 325,000, there's going to be an inheritance tax problem or challenge if you're getting the right advice. Again, most IFAs or protection advisors won't be aware of this, or they're not licensed to advise this. It's a 20% immediate chunk of your life insurance cover, of the difference of the £325,000 bracket. Are you happy with that? Do you want that to happen or not? Some people with £1 million policies, £2 million policies, are they aware a big chunk of that's going to go to a taxman? If they don't want that to happen, you've got to plan. You've got to plan properly and have, so we've got separate policies specific to that. Some people have joint life policies and think that's in trust. They're told it's in trust. You can't put a joint life first death policy in trust because, well, who's going to die first? Who owns the asset? So again, things like that is important. So just looking at the schedule, the menu, and thinking, well, that's what I need, without the proper advice behind it, will cause problems. And then if you're going to start shopping around on that basis, you've shot yourself in the foot, really, because you don't know what really the product is doing. So that's why pricing, I get people want to understand, what are your pricing, but you can't, I think in this area, in this world of planning for wealth, you need to focus on the value, and that is doing the job first, not, well, what is your price? We've got to get out of that shopping around for price, as opposed to shopping for value, and making sure it does the job that you expect it to do. And I think in this industry, it happens often. I've got a will, tick box. Well, it's a 4-page will with standard will, no planning at all. Specific gifts, legacies. Maybe the beneficiaries have died. Maybe the legacy doesn't exist anymore. You're gonna have problems. So people just need to be aware of that. I'll stop ranting now.
That's fine.
Yeah.
So there's one thing you usually say to me.
Yeah.
It's a percentage. I can't remember it, but you said people should be willing to spend X amount to protect their wealth.
Yeah. I would say when you come to estate planning and you want to do it properly, I'd say between 1% and 3% of your estate value. It's really going to be up to 3% unless you've got a significant estate with lots of things you want to do. But up to 1% of your estate value, I think, is reasonable to protect 99% of the rest. So it's more of an investment plan, as opposed to just spending money thinking it's a bit of paper, which people spend more on holidays. After a week or two, that money's done. Like, I get it, memory is fine, but it's not serving or protecting wealth. People pay more on stamp duty, on solicitors' fees. So I think they just don't understand what we're doing as professionals. So the surprise of, that much. Not all the time, but sometimes I think it's because they don't appreciate what this, because it's not immediate. Again, people don't necessarily appreciate the value of what they're getting.
It's just like, if you have a £1 million estate, you can't expect to spend £200 on creating a will. It wouldn't make sense
unless you have absolutely no assets, everything is inherited and in trust already. Then you can justify that, but you still need to know why. So if you just think about it, that 1% to 3% of your entire estate, your wealth, to protect it, the other 97 to 99% is not much. If you think about it in a broad picture, it's really useful, because you're protecting that 99 or 97% of your wealth by using 1% to 3% to protect it. Exactly.
And I feel like a lot of people, when they see the price, are like, oh, I don't know yet. Not sure, it does look expensive. But if you think about it in that aspect, it's only about 1% to 3% just to protect your whole wealth and estate, and also to create generational wealth and pass it down to your children and grandchildren and people that you love. So in a grand picture of it all, you just have to think about it in the long term, how it'd be beneficial to you and your family, and also to carry on and continue your legacy.
No, I agree. I think it's when it comes to pricing, it's but I'll be honest with you, 99% of our clients don't really talk about price. They just want, can you solve the problem? However, it is a common question that comes up, especially with social media and everything else. So hence why we're talking about it in general. And I think people need to understand, hence why we're talking about it. So it makes sense.
Okay. And just one last thing, I know we've briefly covered it already, but if you could tell someone why they should invest into protecting their estate and their wealth, what would you say to them?
Okay, well, our mission is literally to help business owners who love their family, to give them the ability to create generational wealth. Because we pay enough taxes during a lifetime. Now, not everyone agrees with that. Some people believe they should pay all the taxes in lifetime and on death, and that's perfectly fine. But our mission is to serve that particular person. So generational wealth is our focus, and we believe that wealth should be protected and directed in the right way, so that your loved ones can benefit generationally. Especially in my community, it's a rife problem, and that's why I'm extremely passionate about producing generational wealth. Now, we'll help everyone, don't get me wrong, but looking at my background growing up, first generation born in the UK, it's like it's a problem. So how can I prevent that problem from happening? Plus, I've looked at my business background in the past. I've experienced bankruptcy, I've experienced hard times, backs to the wall, and everything predicates down to understanding how the money system works. And ultimately, pretty much every relationship, commercial relationship you can think about, stems down to a trust in one way, shape, or form. So having that background and experience and understand how you can protect your wealth, regardless of, and some people might think of bankruptcy as a negative. It's a benefit if you look at it from the public description. But anyway, not to go off sideways, you got to protect your wealth, and you've got to know the rules of the game so you can play that game very, very well. So that's our mission. And I don't know many people who said I've been there, got the t-shirt, and can actually advise. That's just what stands us out from anybody else in this industry, in my opinion. Yeah. So we help those people. That's who we're called to help. That's our mission, to give them the best advice, and education is the priority as far as we're concerned. So before we even talk about pricing of products, we only offer 2 products, and that's what we call a wealth risk assessment. We'll talk about in a minute. But ultimately, that's an education tool. So what's your situation? Let's arrive at a problem based on the situation that you've given us. What's the solution to that problem? And then consolidate the information so that you've got a document that you can read, walk away with, make an informed choice, and then get the advice executed accordingly. Risk, that's what we come up with. So ultimately, we want to help those people, and there's lots of people out there who need that help, who needs the understanding of what to do, whether it's from a tax perspective as a business owner or a professional, or whether it's when I say tax, in our industry, it's income tax, it's corporation tax, it's inheritance tax, it's stamp duty, it's capital gains tax, and pretty much you take one step to the left, one step to the right, and you trip up again to 10 steps backwards. Well, how can we prevent that from happening? Well, know the rules of the game so we can play it much better. Hence the term estate planning. We're helping you plan for the future so you can make an informed choice going forward. So ultimately, that's all we do. We strategize in that way and help clients to be educated so they can in turn strategize for their family from a generational wealth perspective. That may not be everyone's cup of tea, but that's who we are called to serve.
And just ending it off on that note, I just wanted to mention, I already told you, but we'll recap it.
Yeah.
Over the weekend, I was watching this TV show, Rich House, Poor House, and the rich house, their wealth was inherited. And they said that it was through trusts. So their descendants were able to inherit a massive multiple in their village. I think they owned about 30 homes.
Yeah.
And also they had a ridiculous amount of acres of land, and it was all through trust that they were able to protect it, along with other things like wills and stuff. But they mainly mentioned it was through trusts.
Yeah.
And I think it was his grandfather or father that were able to pass that on to him.
Yeah.
It's just a perfect example of how you're able to transfer that generational wealth and protect what you have for them to avoid it from kind of.
No, you're absolutely right. And
Yeah.
you find families like that have 1 or 2 or 3 custodians to wealth in that family. And when I say custodian to wealth, there's someone whose remit it is to make sure that the family wealth is passed from their generation to the next. And that's their sole aim and their sole responsibility in that family. And you probably find families that wealthy, when they started out, would have some kind of a mandate or some kind of a crest or some kind of a record of what the family's supposed to do. If you do the research of all of the famous families, that they have a rule that they abide by, or a code that they abide by, and they live by that. So the wealth can be transferred down generationally. Absolutely. So, and it's not an accident. I don't believe success is by accident. It is planned. People don't necessarily recognize what happens in the to despise the days of small beginnings. They say people don't really see all the hard work that goes in from hundreds of years ago, or even 20, 30, 40 years ago, why families can reap the rewards today. And another challenge is the knowledge is not out there common. It's not common knowledge for other families to even recognize and to appreciate. Schools are not teaching this. Certainly regular comprehensive schools, it's not taught, it's not seen, it's not recognized. As you said, it's unusual. But yeah, custodians to wealth, raising up family members to understand that wealth needs to be preserved and passed down, making the right choice because of knowledge, because of the right team on their side to assist them. And as generation evolves, every generation comes through, they've got different ideas, different viewpoints, and if they want to have their input in using that family wealth to create more, not from they'll make more money point of view, but philanthropy is still a big deal. Making an impact in the world because they can is still a big deal. Majority of rich people are extremely generous, and they're rich because 9 times out of 10 they had a mission that they wanted to fulfill, and they're doing it on their own terms, and so they're able to deliver that. So it's important if people want to be rich, but certainly want to pass the wealth down so it's not squandered. Thinking about raising a custodian in the family, someone whose aim is to either learn or to employ people who can assist them to pass that wealth on to the next generation. So I'm talking about independent financial advisors, estate planners, barristers who understand revenue law, family lawyers who understand divorce and relationships. Your team will increase and improve. Tax advisors, chartered tax advisors. Your team will increase the wealthier you become, especially in business, because there's so many little angles that it's very easy to trip up in one area in order to get to another area. So you need a wise team around you. The wealthier you get, so that money is not wasted or squandered unnecessarily.
Yeah,
really, really important.
Thank you. And just if you think about it, you work so hard in your life to make a living, to care for the people that you care about. And then the last thing you'd want is, when everyone passes away one day, for all of that to be kind of not going in the direction you want it to go to. You wouldn't. It would be, obviously we know about the inheritance tax as well. You'd want to make sure it goes to the people you'd want it to go to. You want to make sure you can build generational wealth, take care of your family if you're not there, and making sure that you're investing into that and preparing for that is essential. And a lot of people don't want to think about that, but
It's true.
It's something that is inevitable and you have to plan for. So would you rather, the day comes and then your family don't know what to do, and they don't have anyone to take care of them, or you are prepared and you have the trusts in place, you have the will in place, you have the people you'd want to share your wealth with and assign it to, people that will take care of your children if they're underneath the age of 18. It's just very important to think about that, because you never know what the future holds. So we would advise to,
certainly,
for things like that, you can't really put a price on it at the end of the day.
And to add on to what you're saying, even just a couple of days ago, and it happens often, clients want to make specific gifts to their loved ones, and I'm saying, well, specific gifts are great, but what happens if they're not around to predecease, you as a testator or the testatrix, the person making the gift. And the question I ask is, well, are they vulnerable? Are they disabled? Are they able to make choices themselves in the right way with money? I know you want to give them something, but is that the best way to do it? Are they currently on benefits? Will it interfere with their lifestyle? Would they be happy to receive the gift? A lot of people that come to me, who are on benefits, like, oh, is there anything I can do about this? Can I put this in trust? I'm like, well, unfortunately, it's too late. The person who, either you speak to the person who, if they're still alive, who is about to make the gift, to change their will so it's done in trust, so there's no things like deliberate deprivation, or you got to declare it. Like, and they're really upset about that because it's going to interfere with their lifestyle, and it's a whole other conversation about mindset and things like that. But ultimately, if you love your family members and you don't want it to disrupt their, inappropriately disrupt their lifestyle, at least if it's in a trust, if they need money in an emergency, or they're in a situation where you don't necessarily like it, then you can plan for that. You can plan to protect that wealth, and that's what we're talking about. You love your family. You might think you're doing good by them by giving them, a couple of grand or 10 grand or whatever it might be, but that could interfere with them quite in a wrong way. So many family scenarios. I don't know, I'll be here all night, but another client, like, well, the spouse is living in the house with her child, not pulling their weight financially. If they realize the child's going to get that house, they're scared that the house is going to go, in the wrong hands, and if it's divorce, that's it, it's all over. All these scenarios crop up. So you can't start talking about price first when you've got a problem like that. You want to get the problem established first, realize what the solution is. And even if, okay, the money might be there today, you know what to do, how to go about doing it, what to work towards. That's the right way to deal with the situation.
Well, thank you then.
I can ramble on, so let me keep quiet. But yeah, thank you.
Thank you. So I believe that's the end of the podcast.
Yes.
So thank you for listening. And we do love to hear your feedback. So if you could leave a comment or DM us what you'd like to hear next, that'd be very helpful.
Yeah, help us, let us know what, exactly what Sonia said. If there's any topics that you would love for us to share, you want to learn about, please let us know.
Yeah, because at the end of the day, we do this for you, to answer your questions, and just educate you and just let you know a bit more, because if we were in your shoes, we'd want to know the same.
Absolutely.
So thank you.
Cheers. Thank you.